Thank you. Lord Walney, Karibu, welcome. We can see you. And rumor has it that you are sitting in an airport somewhere. John, can you hear us?
Yes, but I don't have to see Commissioner.
Good. I'll be switching off my camera, but in the meantime, good seeing you.
Yeah.
We should be starting in minutes.
Great, great. I'm afraid I am somewhat constrained in that I'm going to be starting boarding by 20 past 10. So if everything runs to time, all will be good. But if not, jolly good.
And Ambassador Mbella has told me of that. So we will be starting on time, which is now.
Great. Good stuff.
We have over 30 people online, and I think most of the key individuals have joined. So let's start in the interest of time to appreciate all of you for making time for this webinar today. And the purpose of this session will be for us to really enhance our understanding of the opportunities available through the UK Export Finance Facility. So first, my thanks to our High Commission in the UK. I can see Ambassador Deborah Kairuki here, and we will get to know who else is around. My name is John Ulanga. I'm with the Ministry of Foreign Affairs and East African Cooperation. I lead the directorate responsible for international trade and economic diplomacy. I acknowledge the presence of yourself, Lord Walney. I acknowledge the presence of Ambassador Kairuki. I think our minister has not yet joined, but we are expecting Minister Professor Kitila Mkumbo, who is the Minister in the Office of the President responsible for planning and investment, will be joining us. Probably you won't cross paths with you, Lord Walney, but we will send your message to him because his flight has also been delayed. I think it's just landing now. Sure. I think I saw from afar Gilead Terry from TIC. I think he was sitting at the end of the bench there, but I can no longer see him. Are you there, Gilead?
Maybe I should move on the brighter side.
At least I could see you from afar. And my apologies if there's anyone else that I have not acknowledged. So once again, thank you so much for making this time. We only have about 90 minutes, which we should utilize effectively to get to know what UK Export Finance is about and what the opportunities we in public and private sector can get. And I really appreciate that I've seen a lot of captains of industry from public sector and from private sector in this session. So thank you so much. Now, when we get an opportunity, we will ask everyone who is asking questions to be very brief and always keep your camera off and your microphone muted. So that we allow we do not allow background noise to interfere into our session. Lord Walney, yes, my friend John, I know you are about to board. So without further ado, let me invite our High Commissioner in the UK, Ambassador Deborah Kairuki, to say a few words, and then he will invite you to say a few words, and then we'll allow you to jump off into your plane, probably to another country. Very
good.
Thank you very much, Ambassador John Ulanga. Dear all, I'm very honored to welcome you to participate in this webinar that aims to create awareness among Tanzania's public and private sector entities about the opportunities availed by the UK Export Finance. This year, Tanzania and the UK will celebrate the 60th anniversary of our diplomatic relations. And in all these years, our relationship has developed and grown over a broad range of issues, including our UK-Tanzania Prosperity Partnership, which has benefited both countries greatly. With so many connections, friendship, and shared priorities, Tanzania and the UK have an even more enormous potential to build a partnership that will benefit our countries for many years. I've witnessed this only within 4 months of my stay here in the United Kingdom. I thank Tim Reid, UKEF Chief Executive Officer, for agreeing to host this webinar with our High Commission. Tim and I met in January this year to exchange ideas on how UKEF can contribute to fostering UK-Tanzania mutual prosperity partnership. Among other things, Tim and I agreed to schedule this webinar to Tanzania's public and private sector so as to give them opportunity to learn about what UKEF can offer to them and how they can benefit from it. I sincerely believe that UK-Tanzania trade and investment volumes will increase significantly if our business community, be it private or public, will become aware of the opportunities under UKEF and utilize them. I thank Honorable Minister Mkutano, who will join us shortly, for accepting to participate at this seminar and give remarks. But I thank my good friend, Lord Wolney, UK Prime Minister's Trade Envoy to Tanzania, for accepting to grace this webinar today with his presence. I'm sure everyone is looking forward to hearing their messages. I want to thank the representatives from the Tanzania's public and private sector entities, as well as business associations, for setting time to attend at this session. Well, after this session, you will be in a better position to explore and benefit from the opportunities offered through UKEF. Our High Commission will be ready to facilitate those who will wish to pursue such opportunities further after today's webinar. I only want to take a little of your time. Let's start this meeting, as I'm sure everyone will be eager to listen and interact after the presentation. With these few remarks, I now wish to invite Lord Wolney, the UK's Prime Minister's Trade Envoy, to give his remarks. Karibu sana.
See, we have been Minister Professor, and it's very your acquaintance virtually again. Thank you, Ambassador John Ulanga, for bringing this together. You are such a powerful ambassador for your country and a great friend to the United Kingdom, and all of you are. It is a joy to work with all of you in the way that you are deeply committed to strengthening the business and economic ties between our two nations to enhance the mutual prosperity, which, as the High Commissioner has said, has been set out, crystallised in our ambition in the Prosperity Partnership, which we are taking forward. So UK Export Finance is a key plank, we feel, of being able to the economic relationship with our countries, and it's really important that we can spread the knowledge, spread the word about the opportunities that UKEF provides, and that you get this opportunity, as you have now, to be able to understand the parameters of the partnership. And also, I think it's really important that our officials in the UK can understand from you what your perceptions are of this scheme. How you want it to be, want to be able to make this accessible for the key strategic aim of being able to provide finance for business that would not be otherwise available, that can grow business opportunities, that can create jobs, that can bringing the kind of investment that can benefit both of our countries. The headline figures are really impressive. The that there is up to around £2 billion earmarked to guarantee for Tanzania's public and private sectors to be able to embark on projects that develop the country and create jobs. But the key is going to be turning that promise of investment into projects on the ground. It's all very well to talk about it's our job collectively, High Commissioner, Ambassador Ulanga, myself, Mr. Mkutano, to be able to turn that that promise of money into actual investment, going into the ground, into projects that are going to make a real difference to our economies and to people's lives. So thank you so much for taking your time to talk with us today. Really pleased to be able to address the beginning of this session. Forgive me that I'm going to have to drop off shortly, as John Langer says, to get a flight down to Westminster. But I look forward to catching up afterwards to understand the key points raised and any issues that we need to take forward. So, asante sana.
Thank you so much, Lord Walney. Thank you for making time amidst your tight schedule. And if you can do 5 more minutes, you'll probably be able to hear from the minister. I've seen Minister Professor Kitila Mkumbo, who is a Minister of State in the Office of the President responsible for planning and investment, has already joined. So let me now, without further ado, invite Professor Kitila Mkumbo to say a few words on behalf of the government of the United Republic of Tanzania. Karibu, Professor.
Thank you very much, John, for having me in this session. I want to thank Lord Walney for his very good remarks regarding the UK facility, and also thanking our High Commissioner, His Excellency Mberwa, for teaming up with you to organize this very important session, but also for all the necessary logistics that they have done. I'm not particularly new to UK because when I was Permanent Secretary for the Minister of Water, I did interact with colleagues in the British High Commissioner here in Dar es Salaam that were handling this particular facility, and I know it a little bit about it. I remember, of course, what is good about this particular facility is that compared to other similar facilities from other countries, I think the conditions that are offered by UKEF are quite favorable. It does not export, for example, jobs back to the originating country compared to other similar facilities. You know, the level of, for example, material that will be required to come from the home country is quite reasonable, quite small actually compared to other similar facilities. If I still remember, because that is 3-4 years ago, I hope they're still the same conditions. So I think this is a great opportunity for us, especially going forward. We still have financing gaps for our 5-year development plan, and especially that we are embarking into the new development vision going forward, which we shall need finance facilities. And I want to think that UKEF will be one of those facilities that can help us implement our current plan, but also implement our next vision that we are trying to develop. So, but more importantly, Tanzania and UK, as the Lord said, we have had long relationship in various fields, including, of course, the diplomacy. Apart from that, the trade and investment. As we speak, UK remains one of the largest sources of foreign direct investment. I was checking my data this morning. I think it is now the second, with almost 1,000 research projects, close to more than £4 billion. So UK remains a very important partner, not only diplomatically, but also with respect to trade and investment. And I think that UKEF is opening new opportunities for Tanzania to engage and even bolster the trade and investment relations that we are having between our two countries. So I wish the participants to this session very productive engagement. I want to assure you that the government is very committed to continuing these engagements, but also through Her Excellency Dr. Samia Suluhu Hassan, our President, we will continue furthering and improving our trade and investment environment to ensure that friends from the UK are able to invest here, but also provide all the necessary support for this new facility. And I hope that from these boardroom sessions, we are going to realize the actual funding coming from this facility into our country, and therefore supporting our development endeavors in various fields, be it in manufacturing, agriculture, mining, transport, and others. With those remarks, let me thank you again for having you in the session. Thank you again, John, for organizing this one with our High Commissioner and all the participants. Thank you, Your Excellency Lord, for also taking part in this session. I look forward to the proceeding of the deliberations, and let you be assured of my support in whatever the way that you want me to support realizing the deliberations that are going to come out of the session. Thank you very much, Asante San.
Thank you so much, Minister Professor Kitila Mkumbo, for excellent remarks. By the way, when you say John, it's both me and Lord Wolney.
Oh, actually, I was referring to you. And when I was talking to the Lord, I was referring to Rod. So
I also saw Lord Wolney smiling, so I knew he also, because he's also John. But thank you so much for very, very encouraging and a sign of show of commitment by the government of Tanzania. And you are spot on in everything you have said about the opportunities available and the alignment between what are the opportunities available and the 5-year development plan and even our new vision as a country. So we hope to utilize this session to really understand what are those opportunities. We'll hear from private sector, etc. later, but in the meantime, it's time to invite now the colleagues. Now, Lord Wolney, if you want to now jump into your next flight, please, I think you're allowed to do that. Professor Mkumbo, you're probably sitting at the airport in Dar. But
yes, I'm just at the airport, so if I can also be given the leave, I'd really appreciate it.
Absolutely, I know. Thank you so much for being that flexible. I saw earlier, I think I saw Emma.
Thanks, John.
Emma Thomas. Thanks a lot. Who is the co-head of global origination at UK Export Finance. I think I also saw Isaac Kahara, country head, not new to Tanzania. He has been here many times. Francois Panelier, the regional head for Africa. The name looks French, but I've not seen Francois. So, but if you're Francois, if you're here, you are all welcome. But this is now the time to hear from you, colleagues from UK Export Finance. Your welcoming remarks and the presentation of what are the opportunities available. So let me just invite Emma, who will take the lead for this session. Most welcome, Emma.
Thank you very much, John, and thank you to Your Excellencies for their opening remarks. Indeed, it is an important relationship for the UK and for UK Export Finance, and we're really, really pleased to be part of this seminar today. I am just trying to get my screen to share. Here we go. So what I can't do whilst I'm sharing my screen is see the audience. So if there are any hands going up or questions going in the chat, I'm afraid we might need to collect those until the end of the presentation, and then there'll be an opportunity for Q&A. I will open the floor, and then I will hand over to my colleague Isaac, who's also on screen. I'd like to pass on apologies from Francois, who's in my team, who's been called away urgently this morning, and as well as Tim Reed, our CEO, who unfortunately is travelling today and unable to attend. But as I say, very excited to be here, and hopefully we can help to raise awareness and demystify some of the UK Export Finance offer. So without further ado, let us press on. As I've mentioned, or as was introduced, my name is Emma Thomas. I'm the co-head of our global business origination team with responsibility for overseeing our work across the African continent. Here on screen, you will see that we have a strong presence of country heads in market in the regions, with Isaac being our representative for East Africa, based out of Nairobi, but regularly traveling to Tanzania, and Isaac will introduce himself shortly. From London, you have myself and my colleague Francois, who unfortunately isn't able to join today, but we really are a strong network very, very responsive and very keen to work with you, and typically work in a multi-pronged approach, whether that's supporting from London, but of course having regular engagement from our country heads who are on the ground and really building our pipeline of business. So UK Export Finance, who are we? We are the UK government's export credit agency and a ministerial government department in our own right. We're the world's first export credit agency, established just after the First World War, so now with over 100 years of experience. And really our mission is to advance prosperity, and we've heard a lot already about the mutual prosperity that we're seeking to deliver between the UK and Tanzania by ensuring and by helping to facilitate trade between our countries, providing competitive financing at attractive terms to overseas buyers of UK goods and services. The financing itself is a commercial source of finance, and it is a debt instrument, so we don't do any equity investment. And for the main part, but we will go into this in more detail, the financing that we provide is either through a bank guarantee, where UKEF effectively lends the credit rating of the UK government to the borrower, which acts as a credit enhancer. So the borrower gets the benefit of the UK government's AA- credit rating, AA+ credit rating, or in limited circumstances, we can also lend directly to the borrower. In terms of our value proposition, which we've already heard a little bit about in the opening remarks, I will just break this down for you kind of piece by piece. UKEF offers a 100% guarantee, as I mentioned, that acts as a credit enhancement on the loan that we underwrite. Now, many other export credit agencies don't offer that full 100%. They offer slightly less, maybe 90 or 95. So with respect to how the banks perceive that guarantee, it is very favourable, and it trades at a premium in the market. So we are confident that you will be getting sort of best terms possible with our guarantee product. In terms of the content policy, every export credit agency will have a content requirement. The core mandate is to stimulate exports from the sort of host national country. So this is a really key part of how we work. As has already been mentioned, UKEF does have one of the most flexible content policies of any export credit agency. We ask for a minimum of 20% of the value of the project we support to come from UK content. So that is effectively the cost of purchasing goods, services, or intangibles. So that could be IP or other things from UK exporters and subcontractors. We can also support projects, and this is another kind of differentiating point, where the exporter is a non-UK company. And the way that we look at that is that we take account of the supply chain that goes into that that non-UK company is procuring from. So that can really maximize the value of the loan that we support, and that also helps to crowd in kind of smaller businesses into the supply chain and counts towards our UK content requirement. That gives us quite a lot of flexibility when we're working in different markets. So the non-UK company, it could be international EPC from Turkey, from Brazil, and we'll go on to illustrate the point further in the presentation. In terms of the attractive terms that I've mentioned, what do they actually look like in practice? Well, UK Export Finance is governed by the OECD arrangement on export credits. We are an OECD export credit agency. And that means that we follow the OECD's guidelines in terms of the repayment terms that we're able to offer. On most projects, we offer 15 years plus repayment. And in renewable and clean growth sectors, we are able to offer even longer repayment terms, so up to 22 years plus repayment. And that really is in recognition of the importance of meeting climate change commitments and ensuring that we have as much flexibility as possible to support those really vital projects. UKEF offers financing in many local currencies as well as in the typical hard currencies in which we do the majority of our support. But in the case of Tanzania, we can look at local currency financing. I would say that this is most relevant to projects that don't generate foreign exchange revenue. So, for example, in the utilities sector, but we're always willing to have a conversation. So please do bear that in mind. And lastly, our value proposition extends to how we support you to do business. So if you have a project in mind that you are working to take forward and you're not quite sure what the UK supply chain looks like, but you want to access our financing and therefore need to meet the minimum UK content requirement, we are able to work with you to organise supplier fairs where we facilitate an event, say in a day, where we match make British exporters to the projects that you're looking to deliver. And that is a sort of obligation-free offer where businesses and borrowers, buyers and developers can have their own conversations and decide who's the right fit. But again, if that's something of interest to you, always willing to have a conversation. So please do let us know. Now, just to touch on UK export finance and how we fit into the kind of broader financial ecosystem, we do play a specific role at a specific time in the life cycle of a project or corporate. We can do corporate finance, so for the private sector audience here today. We can do project finance, where we're really looking at kind of cash flow and repayment through the returns from the project. And we can also, the majority of our portfolio across the African continent and indeed in Tanzania as well, we can work very closely with public sector and sovereigns to ensure we're supporting the delivery of priority strategic projects. So here you'll see, as I mentioned before, we are not a grant source of finance. We are not concessional in the kind of traditional sense that development finance institutions are. But as you're looking to move from concessional to more commercial sources of finance, export credit agencies can be a really fantastic tool. And actually, the rates that we do see are very, very competitive. So we are quite confident that it is worth exploring in Tanzania. I would say, think of us as just one tool in your toolkit, and we absolutely are a competitive source of financing. I will now pass over to Isaac. Isaac, I'm happy to continue to navigate the slides if that's helpful.
Yes, thank you, Emma. Your Excellencies, ladies and gentlemen, good morning, good afternoon, depending on where you're dialing from. As previously introduced by Emma and John, Ambassador John, my name is Isaac Kahara, so I'm the country head for UK Export Finance covering East Africa. I'm based in Nairobi, but as mentioned, I'm a regular visitor of Tanzania, so it's a country that I know very well. So I'll continue with our presentation and focusing more on our products. What you see on your screen, I can sort of split our product offer into two. So on the right-hand side of the screen, what you see as exporters guarantees and insurance, those are products that we are able to provide to any UK businesses that are looking to go to do business in Tanzania. And since the focus of this conversation today is more on the buyer side, I will concentrate on the products on the left-hand side, what is indicated as buyer finance. So in essence, what we have to offer in Tanzania is buyer financing to buyers in Tanzania is buyer financing, which basically are attractive financing terms for you to be able to complete or be able to execute your projects at competitive rates. So this comes in form of either a buyer credit, what is highlighted in red, or a standard buyer loan guarantee. These products are very similar. The only difference is that for a buyer credit is typically meant for the very large transactions, whereas for the standard buyer loan guarantee, this is typically for the smaller transactions. And in reality, how does this translate in reality? Well, we see that buyer credit facilities is typically for your large government infrastructure projects, whereas the standard buyer loan guarantee, we see that the uptake is mostly in the private sector. These are Tanzanian SMEs or mid-sized companies that are buying from the UK and which seek for which they need equipment or machinery, and then they need financing in order to access this machinery and equipment. Next slide, please, Emma. So in terms of key considerations before we look into a project, I would say the first one is the market risk appetite. Basically, what this means, it's the maximum amount of risk that you're willing to take in a specific country. This is determined on a number of factors. Most of them are macroeconomic, as well as, I would say most of them are macroeconomic. And for Tanzania, a number was mentioned earlier on by Lord Wolney. We can take up to £2 billion worth of risk in Tanzania. And we're able to deploy that much into projects, both in the public and the private sector. So in terms of sectors, I would say we are sector agnostic. We can cover most sectors, I would say, with the exception of the fossil fuels sector. This includes coal, but also oil and gas. And the reason for that is that we had a recent fossil fuel policy update, which sort of restricts us from looking at projects in these specific sectors. So, but apart from that, any other sector, we are able to cover those type of projects. Another key consideration is the environmental due diligence, or ENS standards. So we take key interest in environmental, social, and human rights risks and the impacts of projects. So this is one of the areas where we invest a lot of time in the due diligence. And most of our projects, well, I would say all our projects meet international ENS standards, including the Equita principles and IFC performance standards. In terms of process, we expect the borrower to appoint a bank to structure the facility. As Emma mentioned, what typically we do is that we provide a guarantee to a commercial lending bank. So there always has to be a bank in all our transactions, and it is the responsibility of the borrower to appoint this lending bank. And we can work with most banks. In our portfolio, we have about 100 banks and insurers with whom we have worked with across the globe. So that will be probably the first step, to appoint a structuring bank to structure the transaction. And then last but not least, the pricing. So the pricing is split up into two. Given that we are providing a guarantee to a commercial facility, this comes with a pricing to that. So, and this pricing is determined on a case-by-case basis for the guarantee. It will depend, for instance, on the market. So some markets are higher risk than others. It will depend on the profile of the borrower. So, and this is applicable in the private sector. So the credit worthiness of one company is not the same as the other. So depending on the credit worthiness of the borrower, it will have an impact on the pricing of the guarantee. And last but not least, it also depends on the tenor. So obviously, the longer the tenor, the higher the risk, the higher the premium. So that is purely determined on a case-by-case basis. However, it's very transparent. We follow the OECD rules in determining this pricing. All ECAs that are members of, all export credit agencies that are members of the OECD follow the same pricing mechanism. The second component of the pricing is the interest rate. So this is determined by the bank that is lending to the commercial bank that is lending to the transactions. However, as Emma mentioned, because we are bringing in the UK government guarantee, typically the borrower who is in Tanzania is currently rated as B+, gets to borrow at the same rate as a borrower who is based in the UK, which has a AA- rating. So basically, it brings down the cost of borrowing for a borrower who is based in Tanzania. Next slide, please, Emma. Thank you. So here are some of the examples of projects that we have worked on across Africa. Starting from the top left, this was some hospitals we funded in Angola, a 500-bed hospital for which we provided financing in Angola. On the top right, that's a project in Uganda. It's an industrial park, the Kampala Industrial Park, where we were supporting building of the infrastructure of the industrial park, making it investor ready and attractive to investors to come in and set up their businesses there. On the top, on the bottom left, I would say, again, it's another hospital, rural hospitals that we funded in Zambia. So it's a number of hospitals spread across the country, again, in the healthcare sector. And on the bottom right is road networks in Gabon. So as you can see, as I mentioned earlier, we are pretty much sector agnostic, and we can cover different sectors of the economy. Next slide, please. Now, closer to home, last year it was last year, we managed to close a transaction in Tanzania, specifically in Zanzibar. And this was the upgrading of Pemba Airport, as well as 3 roads in both islands of Unguja and Pemba in Zanzibar as well. So this was a contract that is being executed by a joint venture of Propav Infrastructure Limited, which is an international EPC contractor, and a local company that is well known in Tanzania, Mikopo. Again, this shows how flexible we are in terms of how we structure our projects. On one hand, there is an international contractor, but also there is possibility of covering the local content portion of the transaction, which is provided by Mikopo in this specific case. The total financing was 373 billion pounds for both projects. And the benefit that came back to, in terms of UK content, was roughly around 100 million pounds in terms of UK content, meaning that the balance of 200+ million pounds was either local content or content from another country that is not the UK. And 2 banks were involved in this transaction. So the airport was financed by Citibank with a UKF guarantee in the background, and for the roads, that was Deutsche Bank. Next slide, please. Again, now zooming into the private sector, this is an example of a transaction we have supported in the private sector, again in East Africa. In this time, it's in Kenya. This is a perfect example of what we can do for the private sector. One of the myths about UKF is that we only look at very large transactions, but here clearly this is an example where we can also look at the smaller transactions. And again, small is relative. For an SME or a mid-sized company in East Africa, $1 million is not a small transaction. However, it shows that we can structure a transaction where, in the example here, the borrower, which is Atlantis, is a Kenyan SME that provides cloud services. What they do, they create data centers in the cloud, and they were buying from a manufacturer in the UK called Vespertech, who make the equipment for this type of infrastructure. Both companies are, I would say, SMEs because they do not make more than $10 million in revenue. However, they managed to put together this fantastic, financing structure, which allowed the Kenyan company to acquire UK equipment at a competitive rate, and was able to deliver the project on time. Good. And I'll stop there for now, and maybe we can dig into the questions that may have popped up while we were going through the presentation. Once again, thank you very much. Asanteni sana.
Thank you so much, Isaac. Thank you so much, Emma. Excellent presentation. I think with a lot of clarity, and I think creates a lot of appetite of what we can do utilizing the funds from UK Export Finance. But I know the devil is always in the details, so I'm sure some people would want to know where the devil is. So let me see if there's any hand. Otherwise, I will point some names that are familiar to me and request them to either make a comment or ask questions. But please, if you're making comments, please let them be very brief. And of course, even if you're asking questions, just brief, concise, so that we can have an opportunity to respond to as many questions as possible. In alphabetical order, the first name I'm seeing there is Bakari Bakresa. Bakari, do you have any comment or question maybe you may wish to ask or comments to make?
Yes, John, thank you very much for giving me this opportunity to ask a question. Thank you to Emma, and thank you to Isaac for enlightening us more about the UKF opportunities. Just to introduce myself, I'm Abubakar Bakhresa. I'm Executive Director of the Bakhresa Group. It's one of the largest private groups in Tanzania. Of course, we're focused on FMCG and other entities like the media. For us, actually, the challenge mostly with ECAs is really on the ECA premium. So I just wanted to find out more, how differentiating is it with other ECAs on the premium side? Because if you look at Tanzania, for example, when we deal with ECAs, the local banks do provide actually a much better effective rate. So when our group looks at the ECA, normally the ECA premiums does come in and is normally an issue for us. So for UKF, how do they look at it? That's number one. Number two, I just wanted to find out what is the proportion of the private sector in terms of the global financing from UKF? I mean, between private sector and the public sector, what portion is on the private sector? Thank you.
Isaac, do you want to take the... Oh, sorry.
Yeah, please, Emma, I think let's take as they come. Otherwise, you run a risk of... Yeah, please, go ahead.
Okay.
And of course, tell us how we can utilize that approach, but these are two important questions. Please respond to them.
Okay, thank you. Isaac, do you want to come in on the premium point?
Yes, happy to do so. So in terms of our premium, again, all ECAs, export credit agencies that are members of the OECD, apply the same rules. One thing you need to keep into account is that the premium is a one-off payment. So it's a one-off payment. So we pay it once for the entire transaction. Secondly, we can also, in the structuring, include the financing of the premium out of the facility as well. So that's another way of sort of spreading out the cost of the premium over the transaction. And so when you're looking at ECA financing, it's important not to split between the premium and the interest, because it sort of distorts your cost comparison. What you should be looking at is your all-in cost, premium plus the interest, and then you spread it out across the tenor of the transaction. And once you do that, you will see that actually ECA financing is quite competitive compared to what you get from a purely commercial bank transaction. So it's important to sort of look at the all-in cost rather than splitting up between the premium and the interest rates.
Thanks, Isaac. And then in terms of the public-private split, so certainly in the case of kind of sub-Saharan Africa, the vast majority of our support is to the public sector. But as Isaac mentioned, and as our case study illustrates, we do have a good appetite for the private sector and are very keen to do more. So it really is just the case of understanding the credit worthiness of the entity. In terms of the information that we would ask of you, we'd be looking for an initial assessment to understand the last 3 years of financial accounts, and then we'd be able to take it from there. But certainly really keen to do more with the private sector. So it's great to have you on this call. Thank you so much. Isaac, did you want to add anything on that point?
No, you covered it pretty much. Just to add that where we see a huge uptick in the private sector, it's mostly on the, I would say, public-private partnership type of projects, where you've got a private sector company leading a project, and that's where we see most of the upticks for project financing, which is a very, I would say, niche sort of type of financing for projects. However, as Emma mentioned, in this part of the world, yes, most transactions are in the private sector, public sector rather, but we are seeing quite more and more uptick in the private sector.
Any additional thoughts, Abubakar, do you have?
No, thank you. I think it's very clear, and I'm happy to hear that the effective rate anyway will be much better than the commercial lending. So thank you for that, and we look to see more opportunities from UKEF when we deal one-on-one. Thank you.
Thank you.
Isaac, if there is one company you need to chase in Tanzania, it is Bakresa. Please, so make sure you get his contact.
Yes.
Yeah.
Their name precedes them. Yes, I will.
I see a hand from, I'm not sure if I'm going to butcher your name, Batnagar. Is it Ruchir?
Yes.
Or Ruchir? Yeah.
Good afternoon, John, and thank you very much. My name is Ruchir. I'm part of the Taifa Group. Again, the Taifa Group is a conglomerate. We have interests in mining, LPG, aviation, and so on and so forth. Thank you very much for the session, first of all. I had a simple question around the turnaround time. So when we are generally dealing with ECAs or any kind of financing, what is very important is to get the documentation in place. And somewhere we have struggled a little bit with this. So the question is, one, do you provide support to get the project ready so that it can be properly looked at by your experts? And once the documentation is ready, do you have any timelines that you put in place internally for yourselves to turn around and say yes or no to the project so that we can take a decision in a timely manner? Thank you.
Another excellent question, Ruchir. Thank you so much. Emma, Isaac?
Yes, so I'm happy to share a few reflections first. In terms of timelines and processes, it really depends on the nature of the project that we're looking at and the kind of size and complexity of it. On the smaller end of the spectrum, so in the instance of Vespa Technologies, the SBLG case study that Isaac has talked us through, that will be quite simple and quick to make effective. So maybe a few months from start to finish. In the instance of a more complex project, so roads and airports, complex infrastructure that will be having an impact on the local environment and kind of societies, that will of course take more time. There's a huge amount of due diligence that needs to be undertaken on the environmental and social side, as we've already spoken about, among other things. So if you're looking in that type of project, I think we you could be looking at a year or so for the due diligence and all of the studies to complete before kind of closing documentation. But we very much are responsive to the needs of the buyer and the borrower. We want to work as fast as you need us to be able to ensure that we are closing transactions in a timely fashion. And so we do have internal processes. We can give guidelines and kind of set expectations, I guess, in terms of how long things will take. But in lots of cases, it will just depend on how quickly we are able to receive the documentation, at what point we're brought in the transaction, and, a number of other variables. But, appreciate that pace and efficiency is really important in a commercial setting. So we are a commercial outfit and do want to execute as quickly as possible. Isaac, did you want to add?
Yes, I think there was also a question around whether we provide support in project preparation. That is something that we do not do. We don't provide that. It's not a service that we are able to provide. We are not a financial advisor, unfortunately. So typically, we advise the project sponsors to get the professional services of a professional advisor to structure the transactions. And it's important that the advisor also understands the ECA requirements, especially if you're talking about a very large, complex project. For a very straightforward transaction, then definitely like a simple supply of equipment or machinery, there it's rather straightforward. However, if you're talking about let me think, a private company that is planning to set up a power project, for instance, as Emma mentioned, that will have significant environmental and social impact. So hence we require a bit of due diligence, which needs to be done upfront. Thanks.
Thank you so much. I see a hand from Dr. Samuel Nyantai, former chair of Confederation of Tanzania Industries. So please, Dr. Nyantai, and then good luck, Mboya.
Yeah. Thank you, Balozi John, and thank you, Balozi Kairuki. Thank you, the presenters, and for this opportunity. I have two hats. One is as a former chair of CTI, and I had expected a few of the members to have participated in this meeting. But the second one will relate to my own investment somewhere, and I see a lot of opportunities which will open up closed doors that were causing us some serious concern. Now, in order for us to be able to maybe participate and benefit from this, I hope after this presentation, we are going to get a copy of the presentation and more details about UKF, which I see as a really something that we have all been looking forward to in terms of opening up, opportunities and avenues for further development. Is there a small, maybe some projects too small to be considered, or is there any limit? Are there any limits? That's number one. And I'm glad from the presentation that I think different from what we have been used to in terms of other financing arrangements, I think the bureaucracy will be less, and it's a very good consideration that giving us a lot of hope and optimism. So once we get this, and I'm sure many members of the 400 members of CTI, most of the SMEs, and I see one of the very big members, Maharesa, is also there. I see Isaac, not Isaac, but Mr. Bakar. We think we'd like to benefit from this possibility for this potential. So once we get the details and on how we go about engaging in terms of benefiting from this, we'll take it up from there. Thank you very much. Thank you, Balozi, for organizing things, and thank you very much for personally reaching out to some of us. Asante sana, Balozi Kairuki.
Thanks a lot, Dr. Nyantai. Also allow me to invite Goodluck Mboya for his questions, and then we'll respond to those two, and then I'll invite Gideon Terry and Adolf.
Thank you very much. I want to thank the High Commission in London and your team, Your Excellency Ambassador and your team, also UKEF for the information that you have presented to us today. My question I think is going to be a simple one, but we are a UK IT company and we make IT software applications based here in the UK. We work with big companies like McDonald's and a few others. Now, when it comes to a facility like this one, and we want to export technology from the UK in terms of software application, in your experience, what will constitute that 20%? Will it be in terms of the software being developed in the UK, or in terms of just being in the UK, but you also employ people in Tanzania to actually do the implementation? In your experience, could you give us some sort of an indication how that will work? Thank you.
Isaac, should I take the first question and then perhaps you can take the next on content?
Yes.
So I think the previous question, if I remember correctly, is whether there's a transaction size that is too small for us to support. I would say in principle, no, but in practice, there can be. So we haven't done any transactions, I don't think, on the in sub-Saharan Africa with the SBLG project that are much smaller than around $1 million. So the Vespa Technologies case study is really at the smaller end of what we see. That said, there's no reason why we couldn't look at something slightly smaller. Sometimes the challenge is finding a lending bank that is willing to provide the liquidity for a transaction of that size, because it's still a kind of commercial proposition for them. So we do find that the appetite is more limited at the smaller end of the transaction size, but we do have a kind of small pool of lenders who we know are willing to take risk at that smaller end, and you may also be able to explore within your kind of commercial banking partners if there is appetite elsewhere. And I would say also, because a transaction, of course, like any, accrues transaction fees, it will also just be a case of evaluating whether it is cost effective for you to take out a loan at a small ticket size with those transaction fees versus, financing it through cash. So they're the main considerations, but, in principle, always willing to look at the specific opportunity and assess it on its merits. Isaac?
Yeah. I can take the question on UK content. So Mr. Goodluck, so you're standing on the other side of the audience, which is on the exporter side, the products which I did not go into the details into. So perhaps this is an opportunity to walk you through what we are able to provide as support to UK exporters. So as a UK company based in the UK and doing business in the UK, the type of support you're able to access, first of all, is in terms of working capital support. As long as you can demonstrate that a certain percentage of your revenues is generated from exporting, doing business overseas, then you should be eligible to get access to our working capital facility. And the most common facility that is utilized is the General Export Facility. It's a short-term working capital instrument, and basically it's meant to support exporters who, for instance, I'll give an example using a Tanzania case. If you win a very large contract in Tanzania for which you'll need upfront working capital to deliver on this contract, then you should be able to access to to our working capital facility. The second product that you are able to access as an exporter is export insurance. So assuming that you are going to, let's say, to a market, or there's a transaction where you are not very comfortable with the risks that you're taking and you'd wish to take insurance for that specific transaction, then we can provide you with an export insurance facility. However, one caveat of that product is that you will need to demonstrate that you are unable to get insurance from the private sector. Hence, we intervene as an insurer of last resort. Moving on to the second level of your question of UK content. So what we mean by UK content. So UK content, these are goods, services, or intellectual property that are sourced from the UK. So goods can be anything from materials, from equipment, etc. Services is any cost of employees who are based in the UK and are providing services to the overseas buyer. And last but not least, and probably very applicable in your sector, which is the IT sector, is intellectual property. So if there's a cost of a patent, a license that is registered in the UK, that also constitutes as part of the UK content. And the fact that you are a UK company operating out of the UK, it probably means that you are paying taxes in the UK. All this is considered as UK content in that specific case. And your profit margin as well. And your profit margin as well, that is declared in the UK, that's also UK content.
Okay, fantastic.
Thank you so much for the question and the responses, Emma and Isaac. Allow me to go slightly in a different order. Let me invite now the Executive Director of TIC, Gilead Terry, and then I'm also invite the Treasury Registrar of the Government of Tanzania, and Nehemiah Chechu, for the two questions, and then we will continue with others. Gilead, you have disappeared. Oh, are you still here?
Yeah, thank you very much. I was waiting for a minute. Yeah, thank you very much, Your Excellency, Ambassador, for putting this together. A wonderful opportunity, and thank you for the team at UKEF. I just want to ask a very mundane question, because investors and business people that come to us, they want to know the detail. And this is something that I would like to add into the offer that I give investors that show up at our door. And how do I tell them, as a local Tanzanian company, where do they start? Is there a bank you work with? Is there an advisory firm that you work with quite closely? Like, where the rubber meets the road in terms of details, how can they access it, and where do they start as a local Tanzanian company? If it can be as simplified as that, that would be very helpful for us to pass the gospel that you're giving us today.
Thanks, Gilead. Adolf, please mute your mic for the time being. Nehemiah Chechu, please. I also know you're pressed with time. So Nehemiah, please carry on.
Sure. So let me start by thanking Ambassador Mbelwa for coordinating this one, this conference call, and yourself, together with our presenters, Isaac and Emma. So I just wanted to touch on a few things. First, to Emma and Isaac, just for them to have a better brief of us. We are the shareholder on behalf of government on various enterprises where the government has a stake, and that goes across 17 subsectors in about 300 companies. And I've taken the time to internalize your presentation and the response to some of the good questions which have been raised by the participant. I think at this point I find a good value in what UKEF is offering. And I just wanted to assure you that whenever there is an opportunity in the public sector, and obviously there will be, so either where you can reach us or where Proactive will be reaching you, I will help to coordinate. So this meeting for me, it was meant a little more to give you an assurance of that. And I think we see much better synergy and a good opportunity that we can work with you guys in a way of driving this economy forward. So once again, Ambassador Mbelwa and Ambassador John, Thanks for this coordination, and no doubt we'll take advantage of it to make sure that our enterprise can take good value of the offered financing structures. Thank you very much.
Thanks a lot, Nehemiah. Emma, Isaac, you may also wish to know that Nehemiah is by background a banker, so he knows all those things about facilities, etc., etc., etc. You're speaking his language. Let me invite you, Emma, Isaac, for any responses for questions from Gilead, and also, of course, the comment from Nehemiah.
Yeah, happy to take the question from TIC. I would say your first point of contact, and we are going to share the presentation afterwards, which has all our contact details. I would say happy to be the first point of contact, just to soundboard on the opportunities that you think or you see in the market, and where you feel that we can probably be of value. Happy to have that initial discussion before proceeding further, and I'll be able to advise whether this is a transaction where we are able to support or not. So I'll say that will be a good first point of contact for any further for any initial discussions.
Okay, Emma, anything you may wish to add?
I guess just to sort of be grateful for this opportunity again to connect with some of our really important stakeholders, and to affirm our commitment as well to working with the public sector and the government of Tanzania to realise its ambitions. So we look forward to further engagement.
Thank you so much. Let me now invite Pascal and then Gerard.
Thank you, Ambassador John. Thank you, Your Excellency Balozi Mbera Kairuki. Thank you, Emma and Isaac, for your brilliant presentation about the UKEF. My name is Pascal. I'm a managing director for one of the healthcare company in UK based in London. We are more interested in specialized in providing healthcare in the UK. Again, we are more interested in exporting medical devices, to a country like Tanzania, because that is where I'm from. Just one thing I want to ask. I mean, I've been trading in UK sometimes, so this will be probably my first time to invest in Tanzania. And I know when you invest, it doesn't take you 1 or 2 days to start, making something out of what you invested. So, as UKEF, do you give any specific time or ample time for the company to start paying back what they have borrowed, or or once you borrow the money, you start paying back straight away? That's one. Second, you have spoken about the premium or interest rate, but I haven't heard really the actual figure. How much, does it range in terms of, percentage, the interest rate, I mean, especially when I borrow from the UK company. Yeah, that's what I want to know. Thank you.
Thank you. Before Gerard comes in, someone, I think, sorry, I've just forgotten. Somebody, Limo, please mute your mic. Silas Limo, please mute your mic. Thank you. It will help. Thank you so much. Gerard Lusingo. Gerard, can you hear us? If you can, please go ahead. I think you already have a mute in your mic. Please go ahead. Gerard, probably your mic has issues. Adolf? Adolf Castellania? Yes.
Yes. I would like to thank you, both the ambassador, for this coordination. It's really useful for our business. I have some few questions. First, I just wanted to get to know the appetite of UKF in terms of real estate sector, especially housing sector. Because I'm a director of finance in National Housing, a corporation which is in leading real estate developer in the country, owned 100% by the government. But our interest is actually provision of affordable housing to the country, across the country. So we want to know exactly your appetite on this area, in this sector, because in your examples, there was no mention of housing sector. That's one. Second, on your product offerings, you especially that via credit facility, which you said this is aimed at large infrastructure sectors. I wanted to hear the threshold. What is the threshold, so that we guide ourselves against our projects transaction size against this particular facility. Third, I would like to also want to know in terms of us qualifying for the facilities, apart from appointing a bank, which will be intermediary between us and UKF, do we need to have a contract in place with the UK exporters in terms of material maybe we'll require in our projects, so that we qualify for the facilities? And the last on the list is actually, what is the counter guarantee you require from us to qualify, apart from you guaranteeing the bank? Thank you.
Thank you so much. That's a handful of questions. Thanks a lot, Adolf. Pascal, you still have your hand up, so unless you have an additional question.
No, it was just a legacy hand.
Legacy hand. Gerard, if you cannot use the mic for any reason, you might also wish to type your questions in the comment section. Otherwise, let me now invite both Emma and Isaac.
Okay, great. So hopefully we've managed to note the questions and won't miss any, but if we do, please bear with us and we might ask you to repeat. So I think taking maybe the question about repayment terms and whether you have to pay back the loan immediately. So normally we will see, I mean, it will depend on how long you want to borrow for and what our risk appetite is to support that. But we will typically allow for a construction period or a kind of period of delivery of goods and services where you don't have to pay back the loan immediately. So as I mentioned on that slide before, you'll have seen we can do construction period plus 15 years in the infrastructure sector, for example. So you would typically see maybe 2 years for a construction period, something like that. So no, the loan typically isn't repaid immediately. There's a kind of grace period, as it were, and then you'll pay back the loan over the period of time that we've agreed we have the appetite to lend for. On interest rates, we always get this question on kind of, can you give us a sense of specific interest rates? It's really, really hard to, in all honesty. It really depends on the nature of the project. And I know it seems like a cop-out to say it's case by case, and it depends, but it really does. There's so much variability. And as Isaac mentioned as well, you really want to look at the all-in costs of funds. But what we can say with some confidence is in the transactions that we've supported, we do see competitive terms. Certainly, you might expect to see all-in cost of funds that are a few hundred basis points lower than purely commercial rates. But it really does depend on the specific opportunity. If you do have a specific opportunity that you want to test with us, as Isaac said, please do that. We can always give indicative rates so that you can benchmark it against your other sources of financing that you've maybe been more familiar with, and we can take it from there. What else? Maybe I'll take the real estate one, and then Isaac, I might hand over to you for the others. So real estate, we are also open for the real estate and kind of housing sector. We would consider that within the infrastructure sector that we've spoken about and in which we are most active across the continent. We haven't done an awful lot, and I'm not necessarily sure the reasons why. It's not because we are closed to it. I think the key will really be identifying where you'll be able to bring in the UK content. But there are plenty of examples where, we have done that. And for example, even in the construction of roads, we're able to secure the right level of UK content to qualify for a UK facility. So that will be the main thing that will bring us to the table is, where do you think the UK content is going to come in? And if you're looking at the cost of procurement, making sure that that's still within your budget, I guess, for affordable housing. I think you also, on the real estate, maybe that's kind of the main thing I wanted to say. Oh, I think there was maybe a question about, was there anything else on that one? Or am I getting lost now?
Yeah, happy to add to that, Emma. I think just to add to your comments, to Emma's comments on affordable housing, even though we have done an awful lot of real estate developments, most of it has been commercial real estate, especially in the Middle East, sort of hotels, etc., etc. To be fair, we haven't seen much uptake in the affordable housing sector. My experience in this part of the world is that due to the affordable nature of this type of projects, we tend to see most of it is sourced, a lot of the materials are sourced locally. So there's very little opportunities for what we would call UK content or the exported element. But having said that, it's not entirely impossible. There could be some components that could be included in an affordable housing project. For instance, if you include things like, lifts, for instance, where there's a bit of equipment for a very high-rise building, for instance, there could be some UK content, but it tends to be very, very limited. However, having said that, our minimum threshold is 20% of UK content. 20% of the entire project value. However, if we do our analysis and we see that you are not reaching that threshold, we are flexible to look at lower content. But what it means is that you will not get the entire 85% of the financing for the project. You'll get a lower percentage of financing, so you won't be able to get the entire amount that you probably would have gotten if you had met our minimum thresholds. In terms of the buyer credit, I would say minimum ticket size or minimum value is around £30 million. So that would say that means that I think there's someone who is unmuted. Oh, thank you. I would say around £30 million. That would be the minimum for a buyer credit. However, this is just indicative. There's no reason why, especially when you are dealing with the public sector, there's no reason why we cannot go lower than this amount. I have seen buyer credits for much less than that, even around the, I would say, 20 million, 15 million figure. The last question I think was around the qualifying qualifications for UKEF financing. Again, I would say the basic qualifier is UK content. So if there is sufficient UK content, that will be the basic requirement. Let me give a very simple example. If we are looking for at a $10 million project, £10 million project, as long as 20% of that, so 2 million, is sourced from the UK, then we are able to finance up to 85% of the project value. So in my example of 10 million, then is 20%, 2 million is sourced from the UK, then we can fund up to 8.5 million in this specific case through a buyer's credit or a standard buyer loan guarantee. Thank you.
Thank you so much, Isaac. Emma, We have less than 10 minutes to the end of our Q&A, and I see more and more hands are coming. So now let me invite all the hands that are up and invite even people that probably don't have their hands up, but probably have something in their minds. And then I'll give an opportunity to UKF team to be able to respond. CPA Dominic, and then Engineer Benjamin, and then Iwaga Kibona. Luaga Kibona. Or Iwaga. CPA Dominic.
Hi, good afternoon, everyone.
Good afternoon.
My name is Dominic Timothy from CRDB Bank as the Senior Manager Government Business. I joined my colleagues, previous speaker, regarding recognition of the effort between two governments to arrange this forum. And my question go to Emma presentations regarding the matchmaking. So how frequent does the UKF do an exercise of matchmaking, and what is the modality? We as bank, we would like to participate to this exercise in a sense that we'll get the applicant from Tanzania, probably from private sector or from the government institutions. Also to understand what is available from UK, which can be imported Tanzania. Thank you.
Thanks, Dominic. I also assume you are representing the CEO, the Group MD, Abdulmajid, right?
Not officially, but I'm with my colleagues and my senior managers, who directors who are in this call. They are on behalf of the MD.
Perfect. Thanks a lot.
Thanks.
Engineer Benjamin? Engineer?
Thank you. Yes, thank you very much. Thank you, Ambassador Mbero Kairuki and Ambassador John, for organizing this very important webinar. And thank you, Emma and Isaac, for a nice presentation. Mine is just a comment of appreciating this opportunity. You have enlightened us about the UKF facility. And me, Benjamin Champaka, representing the Tanzania Chamber of Mines, I believe this is going to be a good opportunity for our members, now that we are embarking on a local content policy whereby most of the Tanzanians are getting more involved in the value chain to supply goods and services in the mining industry. We are also embarking on the in-country beneficiation of minerals. So I think some of my members would utilize this facility to get relevant equipment and technology to do value addition in the country. So I think it would be a good opportunity if you can get more details on how this facility can be accessed, like the other colleagues have mentioned, so that we can distribute the same to our members to see the opportunity and how they can be eligible to access this important facility. Thank you very much.
Thank you so much, Engineer Benjamin. Luaga or Iwaga Kibona?
Okay, thank you, organizers and the reader. My name is Luaga Kibona from TPDC, Tanzania Petroleum Development Corporation, and I'm working there as a manager for planning. My issue is on the fossil fuel. As the name is, we are dealing with petroleum, and petroleum is fossil fuel. And I have seen in the presentation that there is exception on fossil fuel. And what I can say, maybe my question is, I need to know what is the exception, because TPDC now is working with natural gas. As in the sector, we consider natural gas is more cleaner considered to other fossil fuel, and we are trying to supply gas, natural gas, to replace firewood and charcoal for cooking, and even to replace vehicles which are using diesel and petroleum to use compressed natural gas. As we don't have, and as in Tanzania, we don't have yet the e-vehicles. My question is, I know fossil fuel is a name given for all fuels, but my question is, do we have any exception, especially on natural gas? If any, what should we what exception is there for the cooperation like TPDC to follow? Thank you.
Thank you, Waga. I think your question is well noted. Engineer Benjamin, you still have your hand up. Also, you have someone who has Charles Ndeva. I think your camera is on accidentally, which is dangerous. So it would be good to switch off your camera. Thank you so much. I see there's Sarah. Is that Sarah Masasi? If so, would you like to make any comment? Sarah? Sarah? Okay, you want also switch off mute your microphone. Victoria Michael, are you representing Rafael Maganga, or are you sitting with Rafael Maganga from Tanzania Private Sector Man Foundation? Sarah, you have unmuted your mic. Do you want to contribute anything?
Yes, thank you very much, John and Balozi Mbelwa with the UK Finance team for doing a wonderful presentation. I had some questions, but I see most of the questions have been addressed. And I have this one that I would like a little bit of a clarification regarding additional capacity for direct lending with fixed interest. Fixed interest rates. Does that differ from the other program already mentioned?
Okay, you got the question, Isaac? And Emma?
Yes, I got. Yeah,
thanks a lot.
We got done.
Sarah, thank you so much. Victoria? Michael?
Thank you, John. Thank you, John. Thanks, everyone. Yes, I am representing Rafael, and I've been following up the presentation and the discussions. I'm taking notes on some of the issues. Thank you, John.
Good. Do you have anybody from Sagot Center? I don't see Geoffrey Kirenga. Do you have anybody from Sagot Center?
John, I had a second question that I also wanted to ask.
Sorry, my apologies. Go ahead, Sarah.
Yeah, it's about what influences the floating interest rate within the particular scheme.
Okay, thank you. Emma and Isaac, when you hear somebody asking those specific questions, they're really interested. So now over to you. I think time won't allow for more questions. Probably we'll be told on how else to engage.
Thanks. Maybe I'd start with the fossil fuel policy question. So this is a kind of broad and quite restrictive policy when it comes to fossil fuels. As Isaac mentioned, it includes coal, oil and gas. Where the exemptions come in, they're quite nuanced and quite specific. So I would kind of manage expectations in terms of gas and the specific questions that you're asking. We really would struggle, I think, to find a project that would probably meet the exemptions that are very, very narrowly prescribed. That said, always, I think the best thing to do is to kind of test the specifics with us. We can also share in our pack of materials the guidance on the fossil fuel policy, which is published online, so that you can take a look at it in slightly slower time and get into some of the detail of it, because it is quite detailed. But kind of broadly speaking, I would say that the headline message is, unlike some other export credit agencies, we are kind of we have a stricter stance on gas and aren't really able to support. Isaac, do you want to take the question about direct lending and kind of interest rates?
Yes. So thank you, Sarah, for that question. So we do have a direct lending product. This is where the UK Treasury, His Majesty's Treasury, provided us with a pot of money which we could lend directly into projects. However, this pot of money has been used up by projects, unfortunately, which we have already deployed. Even though we have it in our portfolio, we have very limited capacity to deploy further using a direct lending facility. Typically, how it works is that we lend into a project. This time, the funds are coming from the Treasury. And indeed, the interest rate is fixed throughout the lifetime of the facility. So it doesn't change from the beginning to the end. This was quite interesting during the era when the interest rates were very low. However, in the current interest rate environment, it may be less attractive simply because the current market interest rate, including the OECD rate, which is the CIRR rate that we use for our direct lending facility, are at the moment on the higher end. Hopefully, this will change over time as the economy stabilizes back after the effects of COVID and the Ukraine war and all the global macroeconomics that have been happening in the recent past. We do have, again, very limited capacity left on the direct lending facility. However, this is very restricted on certain type of projects. These are projects which we call clean growth projects, and for instance include, renewable energy projects, but also projects in the water sector, so bulk water supply, etc. It could also include in the construction sector, buildings that are considered as, climate resilient buildings and so on. So again, happy to walk you into the details of what type of potential projects can qualify for our direct lending facility. The other question was on the floating interest rate. This is mostly applicable on our buyer credit facility. Typically, it means that most of the projects for which we lend using the buyer credit facility are on a floating interest rate. So meaning the interest rate varies depending on the market conditions. Thank you. There was a question or rather comment from Engineer Benjamin. Yes, the example that you gave about value add of mining projects in Tanzania are potentially the type of projects we'll be looking at to be able to support. Yes, it's a very good example, and thank you very much for that contribution. And last but not least, there was a question from CRDB about the matchmaking. So on that one, it's usually on a project by project basis, and on a very good example for the projects in Zanzibar, we did one of those matchmaking exercises. Typically, these are sponsored by the exporter, the UK exporter, who is leading that project. In this case, it was the joint venture between Propav and Meko, and they're the ones who organized this matchmaking event, which happened in London around April last year. And I think we covered most of the questions, unless I missed one. Emma?
No, that's all that I noted down. So I think that wraps us up just about on time. So perhaps we hand back to you, John, for closing remarks.
Thanks. I'm seeing a hand from Edwin, but my apologies, Edwin. I think because of time, we cannot take any more questions, but you might wish to contact us, and then we'll pass on the question. Please, my apologies.
No problem.
I would want to invite colleagues from the British High Commission, especially I think Department of International Trade. I mean, I saw Godfrey Wakatare, I saw Umi Sadiq, but before I do that, and because you're right looking at me, Balozi, just 30 seconds word from you. You have listened through the conversations, just 30 seconds, and then we're going to invite Godfrey.
Well, all I say thank you to Emma and Isaac for taking all these questions and for the presentations. It was enlightening, and I'm sure everyone here has benefited from what you shared with them. And let me also thank everyone who has participated from the private sector and public sector in Tanzania. And now what remains is the follow-up. Our High Commission will be ready to work with any of you to link with UKEF, but also our colleagues at the British High Commission. They are also very keen to work with you so that we can realize the mutual prosperity partnership that we all envisage. So thank you very much.
Thanks a lot, our High Commission. Godfrey, you switched on your camera. Would it be you speaking on behalf of the High Commission in Tanzania?
Yes, that's correct. Thank you very much, Ambassador Kairuki, and your team in London for putting together such a wonderful webinar. Closely working with Emma and her team, together with Isaac for brilliant presentations, and also as Ambassador John for moderating this. It's really impressive. But also many thanks to colleagues who have joined the webinar and to get to understand UK export finance. So from us as a Department for Business and Trade, mainly we coming in at that crucial element of UK content. And for private sector here in Tanzania or the public sector, we are the point of contacts as when you are looking for that UK content. So we are more than happy to connect you with potential exporters, I mean UK companies that will be that UK content when you are accessing UK export finance. So we are working close as well with Ambassador Kairuki's team just to bring in together those companies in the UK and go further to what Emma mentioned earlier, that for the UK supplier affairs, that when we connect buyers and exporters. So many thanks to all of you. As you saw my colleague Umi briefly, so we are a team of 2 at the moment. So she's acting country director at the moment. Thank you very much.
Thank you so much, everyone. Thank you for the time. Just a bit of promotion, and I think Ambassador Kairuki would like this. Next session, end of March, 28th of March, Developing Countries Trading Scheme is going to be a physical session happening here in Dar es Salaam. Colleagues from private sector in this, Bakare and the rest, please don't miss for you to know what's happening under the Developing Countries Trading Scheme, which is another brilliant UK scheme to work together with developing countries like ourselves. Asanteni sana, thank you so much for the time, and thank you so much for brilliant conversations. And I have a good.
Thank you so much.
Thank you. Thank you so much, asante sana.
Thank you.
Thank you, everyone. Have a good
Thank
day.
you.
Bye.
Thank
Bye.
you.
Thank you. Thank you so much.
Thank you, everyone. Thanks.
Thank you.
Thank you. Thank you.